Hello everybody, welcome to this video. Now this is obviously going to be a very different kind of tone and a very different topic to what I usually cover on this channel, but it is something that I think is very important to address, and it is something that as an entire industry we are all talking about. So I want to give my perspective on this, and I want to give my opinion and hopefully share a few facts and bits of information that I have that may help to clear things up a little bit more for you watching this. Again, it is just simply me sharing my thoughts, and I've tried to put it together in a coherent way. I've written notes, I've tried to put it together, I've done a small presentation, but because I want to get the video out there quickly, you'll have to bear with me with my usual thought process of just speaking my mind as I have it, with whatever notes I've got in front of me. So basically, over the past week, I've had the quite fortunate position of having attended one of the largest Web3 and crypto conferences in the world. So I was at Token 2049 this week, and there were a lot of very influential leading people within the space, people who have been directly involved in what has gone on this week. And there was not a single panel, there was not a single conversation that I had with anyone that this didn't come up. So I've heard a lot of opinions, I have heard a lot of fact, I have heard a lot of stories, I have heard a lot of stuff over the past few days from people who are either just in the space, ranging all the way up to people from BlackRock, Paradigm, Binance, BitGet, people who are like actually kind of involved within this whole scandal, this whole thing that is going on. So yeah, I'll just tell you guys what I know, basically. So the facts. Okay, first of all, the facts. We know now that FTX have declared bankruptcy. Okay, that has been announced today. They have declared bankruptcy, and that is now ongoing. What we also know, at least from what Sam Bankman-Fried tweeted the other day, is that the reserves that were held on the FTX exchange on the day that they saw the massive bank run, that was just completely unprecedented. They did not have enough liquidity on their exchange to cover that particular bank run. Now, what they say on there is that they had enough liquidity to deliver 24 times the average daily withdrawals, which, let's say you were to go to a cash machine, and on an average day, they get $1,000 being withdrawn. If that cash machine has $24,000 within it, in order to feed those withdrawals, you probably think that's okay. And I think for a lot of banks, a lot of institutions, a lot of exchanges, 24 times average daily withdrawals is probably going to cover you for most stuff. But what we saw on Sunday, Monday, whatever day it was just completely unprecedented. We have never seen anything like this within the industry before. And I think that it is symptomatic very much because of, like, it almost feels like it could only have happened to FTX. And I'm going to go over the reasons why in just a minute. But yeah, I think this is something that, first of all, we're going to see obviously a lot of scrutiny towards centralized exchanges, and rightly so. But for myself, I am not panicked and I'm not concerned about holding my own funds on centralized exchanges, because I do genuinely think that this is something that, yeah, almost could only happen to them. Let's just go straight over into the reasons why. Okay, so the problem is the people, not the system. And I think that's very, very clear. 3 people involved, egos, big public figures within the space. They have very strong opinions. 2 people, and then 1 person in the middle there that's just a bit of a whatever. But 2 people overall. And yeah, just overall naivety, stupidity, lack of judgment, lack of foresight, lack of compassion into what the community is feeling. and ego, I think, has driven a lot of this. So obviously how it all came about was there was an article that was published that highlighted some holes and some concerns within the FTX, the Alameda balance sheet, being that a quite significant proportion of their reserves were held in the FTT token. Now, that's kind of okay if you've got enough stablecoins and you've got enough Bitcoin and you've got enough Ethereum and you've got enough of everything else to back that up. And it's also okay if you are like, yeah, essentially if you'd be able to allow for that token that was created by the company themselves, that has a valuation that was given to them by the market. If that were to go to zero, then they'd still have enough kind of left over to kind of cover everything that's there. But what we saw from that is that obviously the other person within this CZ over here, I think honestly saw an opportunity. Now there has been a very public, there has been very public disagreements between these two in the past. And I think that was an opportunity for the fact that they hold FTT tokens to start to create a bit of panic. So we all know what happened there. We all know about the exchanges that went along. We all know about Caroline in the middle just being completely fucking stupid and getting involved where it probably wasn't wise to do so. But essentially these are people that yeah, it just shows that it's a people problem. But I want to go back to why I think that this could only really have happened to FTX or Binance, but as it seems Binance are much more covered. For the last few months, I think Sam SBF has just at least been has had a massive naivety, a lack of judgment, and has misjudged the community, and at worst has been fraudulent, has been criminal in his actions. And this has been something that has been bubbling up for a while. Okay, he has been pushing for legislation that moves towards centralization, which has then, or would give him more influence, would give FTX more influence, and would kind of damage other players within the space. That obviously created a community backlash in a time where the community is probably at its strongest. Okay, everyone for the past year basically has had to knit together, and the community right now, those who are still here and those who have been able to survive the bear market, are the strongest people. So the community right now is strong, and the community right now does not want that kind of regulation that is going to be seen as a further hit to what is already quite a painful time for a lot of investors and a lot of traders in the space. So naturally, someone who runs an exchange, who I believe should be a completely neutral entity, I think SBF made a huge mistake in lobbying politically and in having an opinion in either direction. Because by having an opinion, you're going to have people that support you, you're going to have people that disagree with you, and an exchange shouldn't be like that. An exchange should be neutral. Like, if they're not, and they are having an influence over the market and an influence over the way things are going, then that is not good for trust within a world that wants trustless, cryptographically verifiable, whatever the words are, system in place. Okay, yeah, I think that was a massive mistake by him. I think the other massive mistake obviously is the clear manipulation that they have been having over the market for a sustained period of time. And you'll know for myself personally, how many times have you seen me talk about what the fuck are FTX up to here? What are they doing? Because they make it so obvious that they are playing major games with retail. You can see it. You can see them trading. You can see the positions that are going on. They have Alameda Research that are trading on FTX. They are far too connected. They have far too much influence over the market. And again, that is going to be removing trust. If people can see an exchange messing around with price, which is what they do, then that is going to turn people off and going to make people dislike them. So that's the other issue that they had. And yes, to a little bit, you do see this sometimes happening on Binance. Binance do trade, but it's nowhere near the extent that it's been on FTX. Like, I mean, FTX have literally caused huge movements in price since, I mean, this goes back to the last bull run, where we went from our initial correction and came all the way back up to 69k. That was like almost entirely FTX that were running that move the whole way up. Now, I've done videos on this in the past, and that isn't healthy. That isn't something that should be happening. So once again, I very strongly believe that because these exchanges, or because of FTX in particular, has a very divisive public figure at the top of it, who is seen as being in bed with Wall Street, who is being in bed with the World Economic Forum, things that people in crypto don't really like. That is why this attack has happened, and why it has happened on the scale that we've seen. So yeah, essentially panic and rumor caused the failure. And it was very much herd mentality that did it. So I want to show a video here. This is just interesting to me. How this video just shows some people just jogging along past a restaurant, and suddenly everybody panics and everybody runs away from the restaurant, and no one really has any idea of what's going on. And literally it was just caused by a few people jogging past. And I think that's kind of similar to what we've seen with the whole FTX situation. Is it was caused by a few people that put a seed of doubt into people's heads. People started to withdraw money off the exchange. You had influencers by purely wanting to get like clickbait out there, purely wanting to get clicks, get engagement. They were like, oh, withdraw your money from the exchange, without actually understanding what was going on. I bet 90% of the people that tweeted about this on the day that it happened did not look at the article initially. I did look at the article and I thought, this is bullshit. They've got reserves there, it's okay. And they did. But no one could have expected the herd mentality, the panic that set in a time where people are panicked anyway because the world is kind of fucked. Yeah, it was just a massive underestimation, is that right, of the way that people can start to just flock and herd in this kind of way. And then, yeah, the rest obviously is history. We'll move on. What else do I have here? So, okay, going into the serious stuff, okay, the contagion effects from this. So it is going to be, there are going to be knock-on effects to this. So although I believe that it was something that is very much focused around one exchange, and why I don't believe that we need to really worry about having our funds on exchanges, I think what we're going to be seeing over the next few weeks should help to calm the situation. There will be a hangover from this, like a very serious one, and it has set the whole industry back. Like I said earlier, what has happened here is like the naughty kid at school who's misbehaved and has given the entire class extra homework, and we've all got to be now doing more. Everyone in the space has to be doing more to prove themselves. There's going to be more regulation. There's going to be some stuff that happens that we're not really going to like. So the contagion effects from this, first of all, there are a significant number of investors and creditors to FTX who are going to need to get their money back. You have people like Temasek, Paradigm, Sequoia, the Ontario Teachers Pension Fund, which are down, I mean, like hundreds of millions at this point. Like they have a significant amount of money. I do have the figures here. Where is it? They're here somewhere. But yes, there is a significant, here we go. Okay, so Sequoia Capital, a 1.1% stake in FTX. Temasek, a 1% stake in FTX. Paradigm, I spoke to some guys at Paradigm over the past week. They have a 1% stake in FTX. That's estimated around $215 million that they need to get back. The Ontario Teachers Pension Plan, a 0.4%, 80 million current investment into FTX. So that means that people's pensions are affected by this. Now, is that a big amount in the grand scheme of things for these companies, for these pension funds? We don't really know. They should be okay and able to like absorb this, but it has obviously created a big black hole that does need to get sorted out. So for a while, for the next few months, there is going to be this sorting out, this this stuff that goes on behind the scenes to try and do what needs to be done to get things back on track again. But I don't need too much into that, so I'm not going to talk too much into that. But at the moment, these seem to be the major thing that's ongoing. There is a lot of money and a big hole there that needs to get sorted. The other thing that we're obviously going to be seeing is a big push towards more transparency and more regulation, whether that is self-regulation or whether that is external government regulation coming in, then that is going to be happening. So what we have seen is a massive swathe of every exchange is now going to be expected to have a fully audited, proven reserves. They're going to be expected to show their reserves. Now, for some, for example, Binance, it seems like there's absolutely no problem there. Okay, they've got billions and billions and billions of assets in reserves that are there in case an event like this should ever take place. And that's kind of understandable. Okay, Binance are huge. And I don't think that they're going to be, I mean, if they were hit with a bank run the size of FTX, they probably would have just about been able to cover it. They obviously have a lot more customers, so they need a lot more reserves, but it does seem like they're a little bit more protected than maybe FTX were. Not much more, because by looking at the volumes that the two exchanges do and the amount of customer capital that's in there, FTX should have been covered, but they obviously weren't. You're seeing from Bybit. So Bybit has said, Bybit is always committed to a client fund safety guarantees one-to-one reserves. We are not a bank and we only custody client fund. We are working on the Merkle tree proof of reserves solution. Okay, so Bybit have announced that they're going to be doing that. BitGet, a very similar situation. Okay, our proof of reserve audit is already in progress, and once completed, it will be posted on all BitGet official accounts. PRIME XBT, a little bit different for them because they're a broker, so it doesn't matter so much. So they don't use any client funds for it because they just are acting as a broker within other liquidity providers. And then crypto.com, which had a hilarious one, they started to post their reserves, which I don't know why they did this. I'm going to reserve judgment. I'm not particularly a big fan on crypto.com, and I think that could be something else that we may see some problems in not too far down the line. But showing that they've got $3 billion of funds under management, and the second largest holding is Shiba Inu, which, why would you post that? Okay, get your funds together, get them in order. For me, that's only going to cause more panic, and they may have not done themselves many favors there, because $3 billion is not a lot. That's not going to be able to withhold a bank run at all, if there is one on crypto.com. And to have that in Shiba Inu is just ridiculous. But anyway, that's not what we're talking about. But that was one particular exchange that did make me laugh, that maybe didn't go about it quite the right way. We'll be interested to see what other exchanges are saying from this. And then other stuff, regulation. Okay, regulation is going to come in. There was a funny quote saying the recent collapse of FTX is a loud warning bell that cryptocurrencies can fail. It is crucial that our financial watchdogs look into what led to the FTX's collapse so we fully understand the misconduct and abuses that took place. I think, to be honest, that to me sounds like it's someone that absolutely has no idea at all what happened. Okay, the fact that they said that cryptocurrencies can fail. It wasn't a cryptocurrency that failed, it was an exchange. Yes, FTT did, but I bet if you actually ask Senator Sherrod Brown what FTX is, what FTT is, they won't have any idea. And that is the problem that we face at the moment within this industry, that the people that are making the rules for this industry don't have a clue what it is, and they can't even accept or applaud the industry for what has been created. Okay, very simply, I think as an industry, what has happened here would happen to any bank in the world if they were to see the bank run on that scale with that kind of hysteria behind it. Your Goldman Sachs, your JP Morgans, your Barclays, your Lloyds TSB, your Chase Bank. There's not a bank in the world that probably would have survived this, because I am almost certain, like, does a bank really have 24 times the amount of reserves of their average daily withdrawals? I don't think so. I think that's bullshit. And I think, to be honest, crypto is already more regulated, more transparent, and better than traditional finance in almost every way, because that's kind of, yeah, that's kind of what we as users demand of this ecosystem. And I think that's already in place. And what I was talking to a lot of people today, and they, or over the past week, and that is the general consensus, is that the regulators do not understand. So it's up to us as a community to be able to educate them, and to be able to show that, yes, these things happen. It's an emerging market. It's not the most liquid market. And at the moment, because prices are down, there's extra strain on liquidity. It's quite difficult to find enough liquidity sometimes when these panics do set in, when these capitulations do set in. We saw it during the COVID crash. We've seen it again here. These black swan events are damaging. But overall, I think we still do a better job than traditional markets do. Like, do banks really show you exactly what they have in reserves? No, they don't. So, yeah. The other thing that I think is interesting from this is the further reason why this could only have happened to FTX is how embedded he is into lawmaking within the US, and why he was always going to be a target for other exchanges that maybe disagreed with the way that things were going in terms of regulation. So Gary Gensler, who is the chair of the US Securities Exchange Commission, does not really have a very positive view on crypto. And I think it's difficult for positive regulation to come through whilst he is in place. But with SBF, with Sam Bankman-Fried, he had a direct connection from there. So Gary Gensler used to work as he was a professor of the practice of global economics and management at the MIT, okay? And the professor, the department head at the MIT, was Glenn Ellison, who is the father of, take it back over here, the CEO of Alameda, Caroline Ellison, okay? So the old boss of the current head of the SEC is the father of the ex-CEO now of Alameda Research. So there is some kind of connection there, which showed that maybe as someone who runs an exchange, they had a little bit too much influence over what was going on. So that's another interesting point, okay, is just that kind of how deep FTX and Alameda and SBF were within the lawmakers and traditional finance and everything, which isn't a good thing, and that's never a good thing, because we're not about that as a community, which is why they've seen so much backlash. there's another interesting thing that will be happening on Monday, and I think this could potentially be more positive and is something that we do need to be aware of, is that MPs within the UK are going to hold their first session on crypto assets as an inquiry within the Treasury Committee. So I believe you can watch this live. So this will be a very interesting thing to watch on Monday. They'll be talking about cryptocurrency as a whole. And with the new Prime Minister here in the UK, Rishi Sunak, he has a very pro-crypto approach. Okay, he wants to turn London and wants to turn the UK into a crypto hub. So whereas the US are probably going to be seeing a lot of hostility towards cryptocurrency, particularly because FTX are very heavily involved over there, I think in the UK we may see a much more welcoming approach. Okay, so it'll be interesting to see. They're obviously going to cover this, and that's obviously going to be a big part of it, but we do have within the committee that is going to be talking about, there are people from Ripple, Crypto UK, Binance and Galaxy are going to be there, basically talking on behalf of Web3, of cryptocurrency, and of kind of positive regulation. So this could be an opportunity for the space to, I mean, be humble and accept that it was a fuck up. Okay, it was a massive fuck up. This is our Lehman Brothers moment within crypto, but it is an opportunity for them to put forward real kind of reassurance that the right steps are being made, that this is an isolated incident, we hope, and that the whole space will be able to move forward. So I'll be watching that very closely on Monday, and I think that will give us a very clear indication of an economy that's more crypto friendly in general here in the UK, or wants to be, with a prime minister who wants to be more crypto friendly in general, to see what their reaction is to this whole thing, because they're the people ultimately that we want to be getting on side. So yeah, enough rambling. Some final little kind of moving forward key takeaways. So I think this is going to be a huge opportunity for DeFi. The thing about that is that because, yeah, this will likely bring a new wave of DeFi interest. The problems that we've seen within crypto and finance as a whole has been with the people. Okay, it's literally everything that's happened has been a person making a massive mistake at the end of the day. And that was caused by greed, it was caused by ego, and caused by, yeah, just lapses in judgment, human error. The nice thing about DeFi is it can't fall for that. Okay, so code cannot fall for greed, jealousy, malicious intent, and lapses in judgment. So I think this will see a big movement back towards the DeFi space. So that is something that we have to be watching. And to see if there is anything interesting that comes of that. I think secondly, one of the key takeaways that I was hearing over the course of the last week is we're going to see a reduction in leverage. I think people are going to be risk off, even more so for a while. Now that does not mean that we are going to see prices falling, okay, because a reduction in leverage just probably means that prices just settle down somewhat over the next few months. Things have been a bit boring anyway, but overall we are going to see market makers taking a step back slightly, because there will be more scrutiny on them, because we know what FTX has been doing. They will be wanting to make sure that other exchanges aren't participating in the same malicious practices. So yeah, they will be more cautious with their approach, and that will likely lead to, while most people think it's going to lead to more volatility, what's happened, I think we're going to see a reduction in volatility across the space, maybe even more so on kind of the lower cap ones that can move a bit more easily. So be interesting to see what happens there. I think obviously we're going to see more transparency. So as a community, we already hold companies to account much more than in traditional finance. So traditional finance just has the luck of being around for freaking ages. So like you can't really, like, you're forced to trust them because they're so deeply rooted into society. But we as a community hold our companies and our exchanges to a much higher standard than I think you get in traditional finance already. So there is going to be more transparency. It's going to be nice to see what reserves every single exchange has, and I do hope that that makes it more yeah, I hope that it settles things a little bit. I hope that it makes things a little bit easier on the market, and it does kind of take away people's panic somewhat. Then not your keys, not your crypto. Obviously, okay, this is going to be another thing, which is a good thing. Okay, so more users will educate themselves on how to look after their funds. You're going to see more people. Ledgers are probably going to see a nice uptick in stuff. You're probably going to see more people researching how to get their money into their own wallet, how to take custody of their own funds, which I think is a really good thing. Okay, I think that's a positive thing. The downside to this for a lot of retail is that the easiest way out currently is just to withdraw to your bank account. And I think that is a problem that we're going to see. And I'm sure many of you here who are watching probably were panicked. And because you don't really understand crypto as a whole, or if you are new to the space, you may not understand crypto as a whole. You may not know what it takes to own your own assets. Your trust may have been damaged in the whole ecosystem. So the easier thing would have been to withdraw to a bank account, and those people are going to miss out, because what this has done is it sparked a new cycle. And I think those people will, by the time things start to pick up, they'll be gone. Okay, the weak hands will have been shaken out, and it's just another indication that the people who are stronger here, the people who really understand it. I myself hold my own keys. I have a amount on exchanges that I trade with, but I do hold custody of my own crypto, and I trust in that. But a lot of people won't. So we're going to see that move towards it. There's obviously been a big outflux. What would you call it? A big move away from exchanges recently, from all exchanges. A lot of those people have probably just left the space for good, but they're going to miss out on the next cycle, and it's going to be a shame, because they're the ones that are going to come in at the top on the next one. Those with money have the patience to ride out the storm. The worst hit will be the ones that can't afford to lose, and that goes on the last point. Okay, so it's the people that can't afford to lose their money that are the people that are panicking. So if you're panicking here, it's probably because you've not got enough in your own bank account. You're wanting to protect yourself. The ones that who can ride out the storm, who can just allow time, like this, just the passage of time to take place, and just trust in the process. It's a very new market, so those that can trust in the process and can have the time are not going to be as heavily affected. New projects will be hit the hardest. Venture capital will reduce for some time, but larger funds will recover quickly. And again, that was the general consensus here, because I spoke to a lot of venture capital firms whilst I was away over the week. So VC will be hit more. Okay, they take more risk naturally. They invest into new projects, so it will be harder for new projects to become funded for a while. But for larger funds, it should recover quickly. Okay, they are not the funds that are going to be using retail exchanges, and they often demand that they own their own keys, and they demand transparency. So what the major focus moving forward for the market is. This isn't really related to FTX, but what the major focus for the market now is capturing sovereign wealth. So that's things like Saudi, the Saudi family funds, and Singapore and other countries like that who have large sovereign wealth funds. I think that's what crypto is going to be trying to capture next. They're not going to be spooked by what's going on here, because they'll be owning their own keys and owning their own crypto, but it could be a good thing. Oh yeah, and finally, I think FTX still has a tribe, so at some stage I think they will bounce back. So there are many supporters who believe that CZ acted in malice, and will feel sorry for what happened to Sam and FTX. They have, I mean, they haven't avoided complete collapse, although they filed for bankruptcy. It'll be interesting to see what happens there. But if the FTT token survives, I would expect, kind of like we saw from Luna, that at some stage, once things die down, then there will be a resurgence from that particular community. And if that is brought together with maybe SBF learning a few lessons, and doing things a little bit differently. I do still think that we'll see him in the space going into the future, and I think that FTX will still have a part to play, but I think it will just be to a lesser extent, which is a positive thing for the space, because honestly they were a bit of a plague. Yeah, so I think that's it. The shockwaves obviously are going to ripple out from this. It's going to be a bumpy ride. It's not going to be a quick recovery. It's set the whole space back for a while, but hopefully my ramblings on for the last 35 minutes have made some of you feel a little bit more calm about the whole situation. Just understand that news articles, that tweets that you see are there for engagement. They're there because they're going to be making those companies some money. If you click on their you click through to their site and they've got their ads running on their site, okay, you are only going to see, for now, the most extreme views coming into play, and the rumors are the ones that are going to get a lot of attention. So obviously protect yourself. Make sure you're not overexposed onto exchanges, but don't panic and don't quit, because to do that, you're only harming yourself. This is a very resilient space. It has been resilient in the past. I mean, I almost feel like I'm kind of a veteran in this space, having been here for a few cycles already. I've only been here a few years, like 5-6 years, but at this stage, compared to a lot of people, I can kind of consider myself a bit of a veteran. But I'm not panicking. It's not a big concern to me. I know that I'm not overexposed on exchanges. I know that I've got good custody of my own funds. And I know that if the worst were to happen, then I'm still okay. And I think as long as you can be in that situation as well, then things will be fine. There are good times ahead, and this is a very, very good time to be really understanding what's going on within the space, to be researching that. You'll probably see a lot more of this kind of thing from me, because now that we are down in the depths of the bear market, now is the time to build for the next bull run. So the big opportunities lie ahead, and for that I need to be, we all need to be focusing on what really is going on in the macro space, the wider crypto world, rather than maybe just fully focusing on trading, which is what we have been doing recently. But yeah, anyway, I don't really think I have any more notes here. I'm just having a look to see if there's anything I missed. But hey, it's been wild. It's been fun. I hope that was interesting for people. And I'm going to stop talking now. Yeah, thank you for watching, and just relax. Yeah, it will all be okay in the end, as long as we can ride out this storm together, and as long as you're okay. So I hope everyone is okay. And let's see what happens. Thank you, and I'll see you soon. Bye.